Hi, everyone, and welcome to this episode of Money Moves. Every episode, I go over the most relevant economic news of the week. And for this episode, Pfizer starts shipping its Rona vaccines. Then I will go over each of my investing accounts, starting with Worthy Bonds. Then I will go over my taxable Lending Club account, as well as my IRA with Lending Club. Then I will go over my Fundrise account, followed by my retirement account. Next will be my M1 Retire account, followed by my higher yield savings account. And then lastly, for my investments, I will briefly go over my Robinhood account and my Tastyworks account. Then I will go over my bi-weekly tracker. Also, there will be some jelly at the end, which is something I enjoyed outside of the markets. If you have big dreams like owning the Bad Gal yacht, or if you're just getting started on your financial journey, definitely like and subscribe. She's expected to go on sale in 2023 for around $25 million if I had to guess. Keep your dreams at the front of your mind, like and subscribe. Welcome to the Portfolio Bulletin. Let's get started. So Pfizer has already started shipping its vaccines, and they arrived in Chicago on Friday. The FAA said this is the first mass shipment of Rona vaccines, and they are being prepared for broad distribution. United Airlines aided Pfizer in the movement of the vaccines from Brussels to Chicago O'Hare, and these vaccines are being moved ahead of approval, which is interesting because Pfizer had previously said it would not move any vaccines prior to approval, but in this case, they have already started moving large amounts of the vaccine, according to this article. They highlight here it is not yet approved and is considered to be more than 90% effective. They reiterate what I stated before. A spokesperson for Pfizer previously said they would not ship any vaccines until the FDA approved emergency use, which they applied for on November 20th. The FDA is not expected to make a decision until December 10th, and then they quickly mentioned that Moderna did apply for emergency approval on Monday, November 30th. They say some Americans could get the first doses of the vaccine if regulators sign off on the vaccine without delay. If you've been reading about the Pfizer vaccine, then they mention that the Pfizer vaccine must be maintained at minus 94 degrees Fahrenheit to maintain its effectiveness, which to me means they could be just testing the process of moving large amounts of the vaccine on airlines and ensuring that they could maintain this temperature for effectiveness. They also mentioned that Moderna has a much higher temperature at 36 to 46 degrees Fahrenheit, which is considered to be a normal refrigerated temperature for up to 30 days. The United Airlines flight used dry ice to maintain such a cold temperature, and they were allowed to carry more than is normally allowed to ensure the vaccines stay far below freezing temperatures. The FAA is working closely with airlines and the vaccine companies to ensure the safe and expeditious transportation of the vaccines, and they established a team to do so because of the extreme requirements specifically for the Pfizer vaccine. Pfizer says they expect that 50 million doses will be ready by the year end, which is enough to immunize 25 million people, which is less than 10% of the overall population of the United States, at 331 million. American Airlines is also expected to participate in the movement of cargo, and I'm sure this will be good for both companies, as all airlines could definitely use some revenue right now. The takeaway from this article for me is that the vaccine and its transportation and distribution is moving even faster than expected, and if they can continue to move at this pace, it seems reasonable that a substantial amount of vaccine could be available in first quarter of 2021, which should head off any long-term lockdowns. In the tug-of-war between locking down the economy and the vaccine, it seems like the vaccine does have an edge for now. Moving on to my investments, starting with Worthy Bonds, I did withdraw all of my interest since the last episode, which was a little bit over $100, and I am continuing to put more and more money into the stock market. If you're still hesitant about the stock market, or if you want a rainy day fund that pays 5% compounded daily, there is a link in the description that gets you one free bond when you fund your account. Moving on to Lending Club, I just want to talk about how, if you've been following along with my episodes, you know that Lending Club is closing down its peer-to-peer lending platform by the end of the year. And because of that, I have been withdrawing money from my taxable Lending Club account and moving it over to different investments. Unfortunately for my IRA, it seems I'm going to have to wait until all of this money is paid back before I could potentially move it to a different broker or some other form of investment. So I've continued to reinvest this money into new notes until I can no longer do so. Moving on to Fundrise. They did change the look of this a little bit. They no longer have your goals here. You have to go into this different tab to see what your goals are and how to stay on track with them. They just give you this little green symbol that says you're on track, and it now gives you a percentage towards your goal. You can see I had a pretty substantial growth since my last login. Looking at my transactions, you can see I'm consistently depositing that $550 every single month. And then I mentioned previously that they were closing down some e-REITs, and they officially closed those on November 30th, and they were merged into other REITs for future growth. I didn't withdraw any of this money. It was just rolled over into new investments, and they're calling it the Fundrise E-Fund, and they closed down my Washington, D.C. E-Fund and National E-Funds. Overall, Fundrise continues to do well and reduce my portfolio volatility, and I will continue to add to it as I still want to increase the overall percentage of REITs in my portfolio. Moving on to my retirement account. This is my long-term buy and hold retirement account, and these are invested in index funds, the C fund being the S&P 500 and the S fund being the total stock market fund, G fund being government bonds, the F fund is the total bond fund, and then the L2050 fund is just a blend of all of these. Coming up tomorrow, it will deposit directly from my paycheck, and it will be allocated based on these numbers over here. You can see my deposit here from last month and what those numbers actually look like. But more importantly, I want to mention here, this is my matching. If your employer offers any kind of match, you should definitely put in as much as you need to maximize that matching, as that is essentially free money, and the returns on that are basically 100% right away. Moving on to my M1 Retire account. Over the last month, it's up over 11.5%, which is insane. That's greater generally than the yearly returns, and it seems somewhat unsustainable, which is why I do have my trading accounts. You can see net cash flows, I am depositing money, and I'm still receiving dividends a little bit over $22 in the last month, and I'm continuing to reinvest with Auto Invest on. Looking at my holdings, I reduced my goal for tech down to 13%, as tech seems to be losing some of its momentum, and that money is starting to move over to some value stocks, which is part of the value rotation we've been seeing in the markets for a while. I increased my percentages of real estate and healthcare, as well as consumer, and a little bit of finance as well. Basically, I put a little bit higher percentage in all of the other groups away from tech, with real estate being the highest percentage, as I think it has the highest potential for future growth. Again, the percentages here are crazy. Finance is up almost 20%, real estate 12%, industrials 17.9%. All of these percentages in the last month seem pretty dramatic. I also want to mention here, I did sell all of my government bonds in my retirement account, and I reinvested all of that money back into different stocks, and that's what's paying for most of the increases in the different sections. I didn't actually sell any tech. I just sold my government and moved that money over to the different funds to get them a little bit closer to my goals. So you can see $275 here and another $610 here. Moving on to my higher yield savings account, almost 5% over the past month, which is still pretty good. Definitely much higher than a higher yield savings account, especially right now with Fed rates being so low. And I did a pretty similar thing here, moving money out of my short-term government bonds, reducing that goal down to 6%, as well as selling $1,000 here as well. I moved that over to some VIG, Realty Income, as well as some of these value indexes. And over the past month, they have all done very well. DIV being the outperformer here at 16.18%. Looking at the activity here, you can see I sold that on 10 November, and then I reinvested all of that money again on the similar days, the 17th and the 20th. Moving on to my Robinhood portfolio, I'm up just over 22% on the amount that I have at risk, which is around $5,600. Overall, this account is worth just over $8,000, so I'm not using all of my capital right now, but it's still doing pretty well. Looking at some of the positions briefly, I did buy some SPY calls after reading some of the articles that I mentioned earlier in the episode. And I'm also long Palantir in this portfolio. I've done 2 videos on this stock recently, and I'm pretty bullish in the long term on this stock. Definitely check those out if you haven't been following Palantir. If you want a more in-depth review of my options positions, I do an option portfolio update, so definitely like and subscribe so you don't miss that episode. Lastly, for my investments, looking at my Tastyworks account, This account continues to grow at a similar pace to my Robinhood account. And looking at a few of my positions, I do have a Palantir position here as well. I'm long beyond meat in this portfolio, which is an unusual position for me. But after reading a little bit on the company, I am pretty bullish, and I think I'll do a review on this company in the future. Otherwise, pretty standard right now. I do have an iron condor on 3M. Everything else is a bullish position for now. Again, I will do a further in-depth review in a future episode. Moving on to my bi-weekly tracker, you can see stocks have been going straight up, basically, for the past month. My trading accounts continue to grow pretty steadily. My bonds, I am selling bonds consistently, whether it's in worthy bonds or those government bonds I mentioned before. REITs continue to grow as I add to them in public REITs as well as Fundrise. And then Lending Club, I'm continuing to pull money out of my taxable account. Then my cash is right where I want it to be, maybe a little bit high here at almost 10,000. I try to keep it around 8,000 as my baseline. So anything above that at the end of the month, I move into investments. Overall, the growth for this period was just over 3.4%. And you can see most of that growth is coming from stocks and my trading accounts. Let me know down in the comments section what you think of the vaccines. Is the stock market going into full risk on mode? Are we going to continue to see all-time highs, or will it be a blow off top moving into a bear market? How quickly do you think the vaccine is going to be available and distributed? And can it beat out all of the lockdowns that seem to be imminent? Definitely like and subscribe if you got any value out of this video, and so that you don't miss any of my future videos. Of course, none of this is financial advice. This is all for entertainment purposes. And with that, let's get to today's jelly. Today's jelly is a video from Daniel Thrasher. He made a video like this a long time ago where he accidentally wrote songs that already existed. So he made a part 2 of this just a few days ago. So here's a few clips from that.
Okay, so I understand that you have written some new music for me.
Yep.
And this is all completely original.
Yes, definitely.
Hang on.
What?
Pace it up a bit.
Okay.
Yeah, that smells like Teen Spirit.
Oh man, I already gave that one a name.
What did you name it?
Child Stank.
Do you have something else?
I do, yes. It is actually a Russian-inspired waltz.
Oh, okay. Is that Hit Me Baby One More Time?
I don't know.
What do you mean I don't know?
I've never heard of it.
How have you never heard of it?
Hold on, just listen to the B section. All right, maybe not.
Oh my God.
Clearly, he has a great sense of humor, and the way he speeds up and slows down songs, so it's pretty hard to recognize them before he moves it into a normal song that you recognize, is hilarious. I've been watching his channel for a long time, and most of his videos are pretty good. If you want to watch the full video, it is linked in the description. Comment down below what you thought of it. Again, definitely like and subscribe if you enjoyed this video, and have a great day.